if you're here in Minnesota, you know it is freezing cold outside, but there are signs that the housing market might be heating up. So today we're going to go through everything you need to know about the current housing market in our February market update. And if you stick around to the end, I'll even try to make a little bit of prediction and tell you some of the things that I'm most worried about heading into the spring market. Now, if you're new to the channel, my name is Steve. I am the co-founder and team lead of the Three Rivers Real Estate team. We get call, texts, and emails every single day from people just like you, wondering about the Twin Cities, the market, and looking to move here. So our job is to help break it down for you, make it simple. And today we're going to be deep diving where the Twin Cities market is, where prices are, where supply is, and where things are trending, and where I think they might be going in the spring. So without further ado, let's hop right in. All right, let's hop right on into it here on my computer. One of the first things people like to look at when they're seeing where the market is at is where the average sales price is now and where are they going and what have they been doing. So if we look at the Twin Cities market in general here, we're looking at all property types. We can see that the average sales price has been decreasing. This is a trend we see nationwide, and this is a trend we see every single year here in Minnesota. So while it might make a great headline saying, oh, prices are way down, year over year we're up over 6%, as well as, again, if we look historically, our average sales price tends to decrease in the winter months, month over month, every single year, and it tends to bottom out in January or February. So pretty much grab any year other than 2020, and we're going to see that it bottoms out February, March, February, January, February. So this is what we see every single year until the market starts heating up with the spring market. So nothing too crazy here. If you're looking to sell, you can take a look at what our days on market is doing. You can see our median days on market's at 32, average is at 48. Again, make really good headlines that it's up over 77% year over year. And if you look from where it was, the lows in June, it's 4x, almost 5x higher. But there's a couple things to consider here. One is our days on market were so low that any percentage is going to look massive. 7 days on market in June is crazy. That's crazy low. The market was so crazy stinking hot for so long that when we see things start to normalize, that percentage wise, they look really scary. But if we look historically, days on market pretty much always come up again in the winter months, tend to peak out in January and February again. And if we look back even in 2016, 2017, we're seeing days on market 59, 49, 76 as early as 2015. So we're moving towards some normalcy here, but we're not crashing by any means. Looking at the numbers, we're not even back to 2016, 2017 levels. So I know headlines are super scary right now on where things are going, but we're not seeing anything crazy that we don't typically see here pretty much every year in Minnesota. One thing we do want to take a look at is our supply. Throughout the country right now, we're seeing a lot of an increase in supply of homes. They're sitting on the market longer, no one's buying them, and those are the markets that are seeing crashes and correcting. Here in Minnesota, we're actually seeing our supply decrease. So we've leveled off in September at 1.9. We sat there for a couple months through November. Then we saw a decrease in December. We saw a decrease again in January now to 1.5 months. Now, if we were crashing, correcting, we wouldn't see that. We'd see it increase very, very rapidly. If we look at what we saw back in the crash, 08, what do we see? Started in 06 and things really started going up and 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 got up to 11 months of supply before things started turning around. And again, historically, what do we see every single year? We see our inventory increase through the winter months, or decrease, through the winter months, and it starts to bottom out in February. Last year, February, 0.9. Last year, 2 years ago, 1. 2020, 1.7, but we see these valleys tend to hit down in February. There's just not a lot of people trying to sell their homes right now. It's too cold, it's miserable, you're in the middle of schools. So we in Minnesota, we just don't tend to see it as much, but there are still people looking to buy, trying to hit that market a little bit early. So that always kind of pushes our inventory down a little bit. Builders also aren't doing as much right now. They tend to have more spring, summer, fall completion dates. They don't have as many completion dates in the winter, so we don't see some of that new construction inventory that we would normally be seeing that pushes up this inventory a little bit. So it's early to tell exactly where the market's going to be going here, but what we are seeing is we are seeing interest rates continue to keep going down. So if we do a quick Google search on rates, mortgage rates, we can kind of go to the news here. So we see demand actually stepped back last week, but overall it's been coming up. I believe rates are right around 6 right now. Feds are actually meeting today. It's February 1st, so that's going to play a role on what things go here. You can see they're down 6.5 according to this one. They're moving around, but they are trending down from where we were, which is bringing a lot of buyers into the market. And anecdotally here, at least on my team, our last 6 offers were all in multiple offer situations. So this is something we saw a lot for the last 2 years. We haven't really seen it since the summer as much. It's the first time we've seen it at this volume. We've had multiple offers go out, be in multiple offer situations. Now, last spring, you were up against 10, 12, 15 offers, sometimes more. Now we're 1 or 2 offers, maybe 3, but we're still seeing them again. So it's something we haven't really seen, which shows that, hey, the spring market might be heating up here in Minnesota. Too early to tell right now. It's going to really depend on where inventory and stuff goes, but it's not something that we've seen a whole lot of. Now, there's still a lot of opportunities out there if you're looking to buy. So if we look at, hey, what is for sale for single family, we can see what's coming soon active with no accepted offers on it. If we go, what's been sitting on the market for more than 14 days, so there's over 5,000 homes that are still on the market for 14 days. If we want to go even more to 30 days, over 4,500 homes right now that are in the Twin Cities market that have been on the market for over 30 days. So there's still a lot of opportunity out there if you're looking to buy. But if you are an A-plus listing, A-plus condition, and an A-plus location, yeah, we're seeing you get scooped up really, really fast. So if you're looking to sell, it's still a great time to do that. If you're looking to buy, there's still a lot of opportunity out there and things aren't going crazy. We don't see them crashing. We see them kind of heating up, at least short term. Long term, it's going to be really hard to tell. We'll see. One of the biggest things that I'm worried about heading into the spring market is what is inventory going to do? We see it coming down, and again, every year historically we tend to bottom out in February and then come up. I'm going to be curious if that's the case this year or not. So many homeowners have such a low interest rate they're locked in at. It might be locked in under 3%. If interest rates are hovering around 6, that's still doubling your interest rate to move. And that's very costly in a lot of families. Now, you might have a lot of equity built up in there to help offset that stuff a little bit. It all depends on your situation. But if you're looking at trading up and it's going to cost you significantly more to do that, a lot of people might rethink their trade up or rethink their move until things settle off, until interest rates come down even further or the market comes up. It's really hard to tell where that's going to go, but anecdotally, from what I'm seeing, that's my biggest concern in the market right now is, hey, what are people going to do when they're up against these low interest rates, this low interest rate area they're locked in at for 30 years? What are they going to do? And if they're in a big home and they need to trade down, again, you're locked in at a 3% interest rate, your house is $600,000, might be too much house for you, but are you going to trade down at a much higher interest rate and your payment stays roughly the same? A lot of people aren't going to do that. So it'll be very interesting to see how this all plays out. It's probably the biggest thing that I'm worried about in this market right now, and only time will tell how that's going to shift and how that's going to change everything going forward.